The 1 minute, 5 minute, and even 1 hour charts can be used with this straightforward EMA scalping technique. To ensure the accuracy of the findings, I backtested this strategy using more than 100 trades on 2 different pairs. We obtained a very high win rate after backtesting the approach more than 100 times. Make careful to watch all the way to the end if you want to know exactly how I arrived at these results. Let's get started now that we have cleared that up. Let's start by going to trading mode. Change the period to 1 minute, 5 minutes, or 1 hour after that. Let's choose the 1 minute time frame since this is the one on which the approach was backtested. Go to the indicator search tab after altering the period. Let's now look for the EMA indicator and choose the tradingview indicator. Considering that we'll be using 2 EMAs, double-click it if necessary. Let's add the second signal to the chart now that you've added the 2 EMAs. To find the stochastic sign, choose the tradingview indicator and add it to the screen. We have now added the last indicator to the chart. Let's alter the indicator settings. Go to the EMA indicator settings first, then hit the settings button and select the inputs tab. Change the EMA duration to 50 after that. Let's move on to the style option now. Here, we'll alter the EMA's hue to make it stand out more. Let's now move on to the parameters for the second EMA. Change the length to 150 by going to the inputs page. Head over to the Style tab and alter the hue of the EMA since we will also be changing it for this EMA. Finally, we will modify the parameters for the stochastic indicator. Go to the settings for the stochastic indicator and select the inputs page. All inputs will be changed to 5 in this process. All that remained to be changed was that. Now let's look at the signs we'll be employing. The EMA indicators will be used in the plan to determine the trend direction. The EMA indicator will also be used to help us predict when it will be a good idea to open a trade. To ensure that the signals sent by the EMA indicators and market action are accurate, the stochastic indicator will be used as a confirmation indicator. In order to validate that the trend hasn't changed to the opposite way, we will also use significant resistance points as confirmation. Now that you are clear on how the indicators will be used, let's look at when to take a stance. The guidelines for taking a short trade are as follows. First, we must confirm that the 50 EMA is lower than the 150 EMA. This demonstrates that the market is in a decline at the moment. Second, we must observe a return of market action to the 150 EMA. By observing the price movement and noting that it is either touching or very near the EMA, you can confirm that this is the case. The orange line must cross above the blue line when the stochastic indicator is overbought, but the signal will still be valid if it occurs relatively near to the overbought area. Third, the stochastic indicator must become overbought. This cross in the overbought region suggests that a bearish pattern may start in the market. Finally, during the pullback, the market must refrain from breaking above the crucial level of resistance. To better illustrate this, let's sketch it on the chart. As you can see, the price is making lower lows and lower highs rather than crossing above the prior high. We will accept the position if all of these requirements have been fulfilled. This will be our ultimate entry signal once the price closes below the 50-period EMA. As you can see, every requirement has been satisfied, so we will take up position. We'll set the stop loss at the most recent swing high, but you can always position it a little bit above it to avoid being stopped out if the price tests the resistance level again. We plan to aim for a risk-to-reward ratio of 1.5 times for the take profit. Let's now watch to see how the deal turns out. As you can see, the transaction was extremely successful. Now, let me demonstrate when to purchase a position. The 50 EMA must first be higher than the 150 EMA. In this manner, we can recognize a rise and identify it. The stock must then retrace its steps into the 150 EMA. We will still regard it as a legitimate signal even if the price is slightly above or below the EMA. The stochastic sign must now be checked to see if it is oversold. Additionally, we must confirm that the blue line is crossed above the orange line. The signal will be deemed valid if the cross occurs in or very near the oversold region. The market will likely continue to move higher, according to this. Last but not least, the price is not permitted to drop below the crucial level of support during the pullback. As a result, we must witness greater highs and lower lows. We can easily see that this is the situation by adding arrows to the chart. Price must finish above the 50 EMA in order to receive the entry signal. If every requirement is satisfied, we will take the spot as the candle closes. The stop loss will be set just below the most recent swing bottom. We will aim for a risk-to-reward ratio of 1.5 times for the take profit. Let's now watch to see how the deal turns out. As you can see, the transaction was once more extremely profitable. Let's look at when you shouldn't enter into a situation so that you don't make false entries. The 50 EMA has passed above the 150 EMA, as can be seen here. This demonstrates that the tendency is upward at the moment. Observing the price movement, we can also see that the price has retreated into the 150 EMA. Let's look at the stochastic gauge right now. As you can see, the blue line passed above the orange line and the stochastic indicator was oversold. This suggests that a bullish tendency may once again begin to develop. We won't take the trade, though, as the price rose above the crucial level of support during the pullback. To further clarify, let's add arrows to the image. As can be seen, the price fell below the previous important level of support. The price no longer reaches greater highs or higher lows as a result. As a result, we won't accept the job. Okay, so now that you know the trading setup, let's actually do our backtest on a 5-minute time frame and see if the outcomes are reasonable or not. I just finished the backtesting, and these results have surprised me. Our win rate is 70%, and the profits end up at 11%. I would also like to mention that these results will be different when trading live, so always try the strategy for yourself before using it. Guys, feel free to run back and forward testing on various markets and times to gauge how well it performs. If you want to see one of my other trading strategies I use when day trading, check this video right here, because this strategy works great on the every time frame you want. I'll see you guys next time.